Hey, this is Arthur Hill, Chief Technical Strategist here at TrendInvestorPro.com. You are tuned in to Next Level Charting. Thank you very much for joining us. So I'm recording this on Wednesday and you are watching it on Thursday. Thank you very much for watching. So today we're going to take a look at small caps and micro caps because they are still lagging the broader market pretty much. We've got new highs coming in SPY. We've got breakouts in QQQ and some of the tech-related ETFs. But small caps, they got these short-term breakouts, but they're still dragging their feet. And that is because of small cap healthcare, because healthcare is the biggest sector in the IWM, the small cap ETF. And within healthcare, you've got a lot of small biotechs. And we're going to also look at XBI. And then we're going to turn to clean energy because we've got some trend signals, bullish trend signals with a number of clean energy ETFs. So we're still in a bull market. There is no doubt about that. Here's SPY and it hit a new high this week. And this is after breaking out of this wedge pattern with strong breadth. And that strong breadth was noted a couple weeks ago here on Next Level Charting when we had that gap and that wedge breakout. So there's no problem with SPY, and that's really my main index ETF when I want to measure the broader market. If you want to look at RSP, the equal weight S&P 500, which takes out market cap, basically everything's equal, it hit a new high as well, so no problems there. We look at MidCap's MDY, no problems there as well. Now, we had a long range here, but we broke out of this range and we're falling back after this breakout. But I think it's overall more bullish than bearish because you did hit a 52-week high and technically you have a higher high. Maybe we move back into this range and that will set up another short-term oversold condition. Now, small caps are still underperforming. Here is IWM and there is the March high. We didn't exceed it in the summer and didn't even challenge it here in October. And you can see IWM, this is the high from early September, and it didn't get above that high either, kind of failed at it. So a lower high working. So small caps are really not the place to be. And I don't think they're the canaries in the coal mine. I don't think that bodes bearish for the broader market. I think the broader market is more based on large caps, the equal weight S&P 500, and maybe mid caps to some extent. If we go one further rung down in market cap, we see micro caps, and they are underperforming. There are the September highs and didn't even break above those highs or challenge them, and well below the March and the June high. So micro caps are lagging the more than even small caps. Now, if we want to learn why small caps are lagging, we have to dive into the ETF and see the biggest sectors in that ETF to learn more. So here I am on the iShares website looking at the Russell 2000, and you'll see a link there for holdings. And you click on the holdings and it'll show you the top stocks. That's really not going to help us much because they're all pretty much weighting below 1%. You can see 0.61%. AMC is the biggest holding, and it's one of these meme stocks. But if you look at the largest holdings, as far as these sectors are concerned, healthcare is by far the biggest sector in the Russell 2000 small cap ETF, 19.4%. And the next biggest sector would be financials at 15.65 and industrials. So if we want to know what's driving small caps, we need to look at those three sectors. But I'm just going to look at healthcare for now. So here is the small cap healthcare ETF, PSCH, and this is derived from the S&P small cap 600 index, but it is comparable to what we're seeing in the Russell 2000 ETF IWM. As you can see here, there's the February high for healthcare small caps, and they didn't clear that high in June, hit resistance there, have a lower high in September, and you can see we are on the verge of breaking below these lows here. So maybe there's a lot of support here, but clearly some relative weakness right here from September, October, and soon will be November. And the reason for that would be biotechs. And I give a hat tip out to Jonathan Krinsky. You can follow him on Twitter. And he pointed out that small caps are being weighed down by healthcare, AKA biotechs. And this is XBI. It's the NASDAQ S&P Biotech ETF. And you can see that it declined there from February to May, and then has pretty much moved flat. Now, maybe there's a lot of support here in this 118, 120 area, but there's a downswing right now. And we got to get that downswing reversed to show some buying pressure. So there's a clear resistance level to watch, and it would be that October, that mid-October high. So if support is going to hold, and if this is a base, we need to see a breakout there, and that would be bullish for XBI. Now, the indicator window shows the StochClose indicator turning bearish in March and staying bearish. It did not get above 60 on these two attempts here. So this is staying in a downtrend, and it needs to get above 60 for a systematic trend signal. So before we get to these clean energy ETFs and the trend signals, I first want to explain the method behind the madness of the StochClose indicator. And basically what it's doing is it's measuring a range, a 125-day range. And I'm looking at where price is in that 125-day range. And as prices trend higher, that range is going to move higher. And if prices move lower, that range is going to move lower. And so I've got a bullish signal and a bearish signal based on that range. And so this next chart comes from Amy Broker. It's where I develop these strategies. And I want to show you how StochClose works. And then we're going to look at the signals in the clean energy ETFs. So StochClose is a trend following indicator. And what it does is it basically tells you where the close is relative to the 125-day range. That is 6 months. Now I smooth this indicator out. So I've got price bars in gray, and I've got the smooth 5-day moving average in blue. And smoothing out the price bars, the close by 5 days, really helps to reduce whipsaws and give you better signals overall. So we have this 125-day range, and as the range rises, as prices rise, you can see that this range will rise. This is the low end of the range, and this is the high end of the range, the gray shading. And so if we look back here to April 2020, the green line is the 60th percentile. And so when you move above that green line, the 5-day moving average, you're clearly in the upper half of that 125-day range, which is the gray zone. So that is a bullish trend signal. And there's StochClose in the indicator window turning green to trigger bullish. And so it stays bullish until you move below the red line, which is the 40th percentile. Because when you move below the red line, you're clearly in the lower half of the 125-day range. Now, it's not a perfect indicator. No indicator is perfect. The 125-day setting is not perfect either, because you're never going to find the perfect setting. I mean, you might find that sometimes 125 days works, sometimes 190 days works, that's 9 months. I just like 6 months. And trend following indicators are never going to catch the exact top or the exact bottom, but they're going to catch the meat of the move, and you're going to probably have a profit 40% of the times and a loss 60% of the time. But you can see if you had traded this trend signal from April until March, you would have had a nice gain there in XBI. So it triggered bearish there, and it stayed bearish because we're in the lower half of this range. And you can see the range has narrowed quite a bit recently. And so we need to get the 5-day moving average, the blue line, above 131 to trigger bullish, for XBI. And that is how that indicator works. Now I want to show you, because I'm going to use QCLN because we got some clean energy ETFs triggering bullish. And there is QCLN. So you can see a huge run for this bullish signal from 2020. That was in May, and it lasted until May 2021. And it stayed bearish, but then you can see the blue line getting bullish there at the end of August, above the green line there in the upper half of the 125-day range. Held, stayed bullish there in October, early October, and is still on a bullish signal. And let's look at some of these signals on a table. So here is the trend and ranking table at trendinvestorpro.com. I update it every Thursday and Saturday, and we're using the StochClose for the trend signals. And so you can see all the new trends by clicking on New Trend. This is available to subscribers here. And then the number of bars since the trend signal and the change since the signal. But I'm going to go ahead and do this sort here so we can go down to the clean energy ETFs. And so there we can see ICLN's got a new uptrend signal. We can see PBW hasn't triggered an uptrend signal yet. QCLN triggered one 38 days ago, and it's up 3%. TAN Solar Energy triggered one 7 days ago. It's up 1%. But FAN has not triggered a signal yet. And let's take a look at those QCLN and TAN charts. So if you want to know more about these signals and the StochClose strategy, as well as follow these signals for our core list of 129 ETFs, be sure to check out trendinvestorpro.com. So here is QCLN, the Clean Edge Green Energy Index Fund, and Tesla happens to be the biggest component at 10%. But there you can see it triggering bullish there on August 31st. And then if we look at the price action, we can see a big triangle-like consolidation and a breakout working there. So it is a bit extended from 60 to 73. And you say, well, you know, I really don't like to chase things when they're overbought. I really like to wait for it to come back a little bit. So you can use this indicator. It's part of the Trend Investor Pro Indicator Edge plugin. And what it is the momentum composite. And so I'm going to put it on there, and we can use this to find oversold conditions within a bigger uptrend, because that's basically all I do at Trend Investor Pro is look for pullbacks within uptrends. So we've got this uptrend signal, and I'll look for this momentum composite to dip to -3 or lower to suggest we're oversold, and that might be an opportunity to partake in the bigger uptrend. Another one is TAN. Here is TAN, and we can see as well it's got this consolidation and this breakout. We did get a little whipsaw there with the bearish signal in October and then back bullish again, but hey, whipsaws happen with trend signals. But I will be watching this momentum composite, and if it dips to -3, that would be a chance to partake in the bigger uptrend based on a pullback. Buy the dip, sell the rip. So thanks very much for tuning in to Next Level Charting. If you're watching this on YouTube, give us a thumbs up or go over to StockCharts TV on demand if you want to see a replay of this. Thanks again for tuning in, and have a great day.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.